Welcome to FOMO Consulting for your daily AMC stock analysis video on Wednesday, June 30th. Ladies and gentlemen, they are truly terrified. We have them in a corner. There is no escape. And as always, the apes are winning. The diamond hands are winning. Most importantly, retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate the support. Let's get into the video. Thank you as always to each and every one of you who has liked, shared, commented, and subscribed. It means the world to me. Thank you very much. Let's start with a quote. Some of the boring days have lots of emotions with no feelings. Isn't that the truth? We've certainly had our patience tested over the last few weeks as we go through this healthy period of consolidation. Had some red days, some green days. Overall, we wake up every morning with the anticipation of the squeeze, or at least a big green day. But all along, the red days don't bother us. The green days we celebrate. But overall, today was a boring day, and quite frankly, it's been a boring stretch. I'm sure you would agree. Let's look at the broader market. So the broader market has been a little more eventful. S&P up 5, Dow up 211. Good day for the Dow. NASDAQ down 24 points, and Russell was up 6 points. And as you can see, overall, blue chips were relatively mixed, but overall not a terrible day. But if you look specifically at the Russell chart, which I'll show you very shortly, AMC pretty well mirrored it for the better part. Let's look at crypto. Overall, crypto is relatively mixed today, not a terrible day. Litecoin is down just a bit, Ethereum up just a bit, Doge down, Bitcoin about flat. So overall, not a terrible day. Certainly been better, certainly been worse. I believe, again, it's stabilizing and kind of finding its bottom, and it is now in a recovery mode. Well done, German Apes. You closed at $47.19, down 1.69%. No big deal. Overall, great day. You always hold the line early in the morning. Certainly very appreciated. So well done to Germany. Let's look at AMC. Overall, as usual, either we pump hard or we drop down quick right at the opening bell, and we tend to either recover or fall off. Always relatively volatile in the first 30 minutes to the first hour, and we spent pretty much the rest of the day in consolidation. As you can see, we did recover just a bit at the closing bell to basically close green. So we closed at $56.68, up 25 cents, down a bit after hours, basically just kind of barcoding, no big deal. As you can see, just not a lot of volatility today overall, just another day of consolidation, which will serve us well very soon. And as you can see, we relatively mirrored the Russell 2000 chart. You can see the big fall off right at opening bell, and then kind of a rise up in consolidation pretty much for the final 2/3 of the day. So overall, no big deal. We just need a catalyst, and I believe we'll be getting one very soon. So let's take a different look at AMC on the 30-minute chart. Again, you have downward MACD and RSI, and you certainly have a price level that's holding flat, if not higher lows, which is bullish divergence. And you also have a wedge pattern, which we are quickly approaching the end of, and this stock will have a decision to make. So let's look at AMC from a different perspective. This is the 1-hour chart. As you can see, $60 is a key level, $50 is a very strong floor. And as you can see, over the last couple of weeks, we've just been creating higher lows, incrementally walking the price up. And again, we are at a decision point for this stock. And as you can see, RSI and MACD both in a downward trend. The price is at a higher low, which is hidden bearish divergence, which is very bullish. And I believe we'll have a breakout in the next few days. Let's look at it from a different perspective again. 1-hour chart, as you can see, wedge pattern. We are at the end of that line, and this stock has a decision to make. Again, bearish, hidden bearish. So let's look at it from the daily chart. We all know this is in a pennant, wedge, whatever you want to call it, bull flag. We are nearing the end of this over the next day, if not two. I believe we'll break out of this very shortly. MACD is trending down. Price is creating higher lows. It's certainly, as you can see, RSI trending down, which is hidden bullish divergence, which is very, very bullish. And I believe we are going to have a breakout in the next couple of days. So everyone that missed the alligator yesterday, alligator is still mouth open, but kind of chilling. I believe he is poised for yet another hedgy meal. And as you can see, RSI is back in the channel, approaching the very neutral level, and the MACD is in a shallow bearish direction. But again, as I showed you, we are in a hidden bullish divergence pattern. So I believe we'll have a very, very violent breakout in the next few days. So what I want you to look at is everything before the run up. We spent basically 2 months in a consolidation period, pure boredom. Obviously, we were all anticipating the run up. It was a tough time to be invested in AMC. I bought in early February. We just had to kind of ride that 2-month period out, March and April, early May, and then we finally had the breakout. But if you look closer up to the earnings point, our volumes were down into the 20 millions a day, 30 millions a day, and the day before earnings, we were literally at 16 million for the day, which was a pretty tough day to watch. But overall, if you look, the MACD RSI, we're all just kind of trending in that neutral direction, and that is exactly the point we are today. So let's look at GameStop. GameStop had itself a good day. Closed very, very strong at $214.14, up $3.26. You can see where this stock is trying to break out, and they are hitting it down no different than AMC, and I'll tell you why that's very important very shortly. So let's look at the Viacom chart, and I want to show you why this is so important as it relates to AMC. So we all know this is the Archegos margin call. Viacom absolutely tanked, as well as Discovery tied up with Archegos, right? So keep in mind of the timing around late March, end of Q1 financially for a lot of these banks. It was a really critical time. So if you look at Credit Suisse's Q1 reported earnings, that took a major hit to their quarterly earnings. And as you know, stock price, investors, everything means the world to these banks, and really, any publicly traded company. But, they took a $5.5 billion loss, which basically offset all of their other earnings as it relates to other pieces of their business. So it took a major effect on that, and their stock, as you can see, fell off and has yet to recover. I believe, and keep in mind our opponents who are shorting this stock, who are long and short or just short only, they also have quarterly reports, which ends today. I believe this AMC has been suppressed to the point where they could not incur additional losses to affect their quarterly earnings. The chart alludes to the fact that this is going to break out over the next few days. We have the pennants, we have the wedges, we have the hidden bullish divergence, you name it. Every bullish indicator's out there, right? But the price hasn't moved. We know now, obviously, AMC is on the threshold security list. That may come to pass, and we'll see the results of that next week. We know those FTDs that the due diligence was done on never really showed up from a price action perspective last week or this week thus far. So there's a lot of things that lead me personally to believe this price has been suppressed simply because of to protect people's quarterly earnings. And if you are going to take a massive loss, you want it as early in the quarter as you possibly can get it, so you have time to recover. And that's just coming from my personal profession. So, I can certainly see there's a strategy behind that. So if they know they are facing additional billions of dollars of losses, if AMC and GME run, might as well let it happen early in the quarter as opposed to end of the quarter, if that makes sense. So obviously AMC withdrawals form S3 originally filed in 2018. That is actually very, very good news. Robinhood pays record fine to FINRA settling probe into options trading issues and technology outages. Robinhood again pays $70 million for quote unquote significant harm. The app users regulator says this is not related in any way, shape, or form to the January squeeze with AMC and GME. And pretty cool news, Elon Musk Starlink deliver internet nearly worldwide within weeks. I know it went live this afternoon. Very, very exciting about the new technology. So let's look at the short interest. So overall, as you can see, shares on loan have gone up substantially. We are now over 100 million. Cross to borrow trickling up to 2.17. Utilization coming up just a bit to 88.49. Short interest is down just a little bit at 17.96. And today they did not borrow a lot. I believe that's related to the threshold list, but they did return quite a few at 7.31 million. Keeping in mind this is about a 2-day lag due to the T+2 settlement period. So overall, that would be, I guess, Monday's data. But overall, you can see the short interest, the fundamentals of the squeeze have not changed. The institutional ownership is at 432. Volume was down today to 58 million. Short shares available according to Fintel, 1.3 million, and the cost bar fee, 1.29. So this is holding relatively steady, about 33.5 days for the short positions on loan. They shortened that timeline substantially, but we are holding right now at least around 33 to 34 days versus being in the 50s. So let's look at the short interest trend data, clearly trending up along with all the core data. Nothing again has changed. So let's look at all the options. So the options, we know right now we're in the 56 to 57 level. I believe it's going to be a fight. I believe we are going to challenge 60, if not 65 this week. Now that we're past the quarter, we'll see what tomorrow and Friday brings. But you can certainly see a consolidation of volume right around the 60, 65, and $70 level. And if you look further down at the $80 level. So let's look at the big trades today. Overall, call to put ratio is about 2 to 1. Still very, very bullish. Again, IV has calmed down a lot recently, obviously due to consolidation. Certainly a large contract, 15,000 contract for an August 20th at a $25 strike put. And as you can see, there's a lot of calls and puts, a lot of big money being spent today, but overall volumes in general have been down. Always fun to look at, take with a big old grain of salt, but nothing fundamentally has changed with this. Still showing very, very bullish price rise. So as always, I am skin in the game. I had a slight uptick. I'm sure you did as well today, but overall, nothing changed. Pretty flat consolidation day. So let's close with a quote. Money has never changed anyone. It just magnifies who they are. Hopefully this will magnify the absolute best of you. We certainly know our opponent, who they are, and the money has certainly magnified who they are. So I hope you found this video informative and entertaining. If you did, please like, share, comment, and subscribe. I would appreciate it. It's a newer channel, and I would appreciate the support. But as always, thank you as always for watching, and I hope your life is full of green candles. And I'll talk to you soon. Bye-bye.